Already bullish market conditions sitting at 14 on S&P 500 and 0 on the bearish side on the trend condition indicator, just meaning that all 14 levels of trend on the S&P 500 from the longer term to the shorter term are all currently bullish. We're seeing that also on the 1 hour time frame as well. S&P 500 is hugging up against this supply block right here and attempting a potential breakout right here. Really nice looking pattern for a breakout. We could see a big day today if we can move through that level and continue to hold that. Could see some nice follow through on S&P 500. We're seeing futures up a little bit as of right now. Nothing too significant, similar price patterns. We're seeing the breadth of the market. Stocks on the S&P 500 above their 50-day moving average, sitting at 54. So nothing too exciting. The extremes on that are 80 and 10 to the downside. So we're sitting right in the middle. Ideally, when you have a strong market condition, either up or down, once you get to those extremes, those are some of the areas that you can be watching for some kind of reversal. But we kind of just got some indecision still. We'll see if that breakout actually pushes us higher. We now have majority bullish on the trend indicator as well, meaning that we've shifted now from this expanded state to this contracting or compressed state, and that's an area where we can advance back to the downside, or we can compress that and then start to fan back out to the upside, expand that to the upside. We'll see if we get that scenario here on breadth for S&P 500. VIX, a majority bearish, a little bit of a blip to the upside here this morning. We'll see if that develops into anything as well in the markets. SHY short end of the yield curve, we're seeing still majority bullish, but relatively neutral right here as this trend is really compressing. It's trying to decide which direction it wants to go. Ultimately, we see this start to fall and start to drop. That means that that we see it start to rise. We want to see interest rates dropping. And so as bonds are going higher, that means interest rates are dropping. Right now, we're seeing bonds kind of flat to the downside. That 2-year yield is hovering right similar scenario, majority bullish, that yield at 4.28, and TLT, the long end of the curve, had a little bit deeper move back down on the 1 hour time frame, back to majority bullish here on TLT. That is corresponding to the 10-year yield in this chart here. We're seeing a little bit of a bounce right here. It's kind of holding up, had a nice confirmation bar, and then just retracing back down again, some consolidation. So we're getting some volatility around this 4.5 range on both the 10-year and the 2-year. Dow Jones Industrial Average, majority bullish, also nice compressed consolidation, at least on the price activity here, where we're looking at that same idea, kind of that same price pattern as S&P 500. So a nice rally, consolidation, see if we get some follow through to the upside on the Dow. Also, NASDAQ 100, similar price pattern also. And again, keep an eye out today, see if we can break through that and then hold those upper levels. We may see a little bit of a follow through. Again, just remember where we're at in this trend. We go out to that weekly time frame. This is where we're at on the weekly time frame for NASDAQ. We've had our compressed state. We're now in an expanded trend, which means that we're at the later stages of the trend. We just have to be aware of that, not be piling in aggressively to equities, but managing risk according to the idea that the possibility or the probability of this trend expanding aggressively to the upside is just not there. That's triple Qs. This is Dow Jones Industrials. Let's take a look at S&P 500 also. So really, really expanded trends, top end of the range, and a 2-year bull market so far puts us at that area where we could see some consolidation at these levels, and that's a longer time frame. Obviously, we're going to be seeing some ups and downs along the way. Let's jump over and take a look at the Russell 2000. Squeeze that in here just a little bit, and even that price action back up. If you ever run into that where your screens are all over the place, you can come down here and just click A. That'll auto fit it back to the screen. And if you're way off the chart here, you'll see a little arrow down here. You can click on that arrow. It'll scroll you to the most recent price activity. Just a quick way to kind of even things back up again. This is Russell 2000. We've got really a neutral trend on Russell, both on the daily and the 1 hour time frame here as well. Those are your small cap names, a little bit more risky, a little bit more aggressive, and so those are not performing quite as well as some of the larger cap names like the Qs, like the diamonds, and the S&P 500. Let's jump over and look at oil quickly here. We've got majority bearish on the 1 hour. We've got really a neutral trend as it's had that big run-ups, retraced back down, still hovering in that 50% retracement zone, right around that 75 range on USO. GLD, which is the ETF for gold, we talked about this expanding trend. It's now starting to soften just a little bit here, and that is certainly expected after you have compression. Now you've got expansion, and we'll see what ends up happening here on gold. We've got a bit of a range that we could pull all the way back. The breakout levels around that 256 range. On the ETF for GLD is right around that 255, 256 range. Let's look at silver. Also had a very similar pattern, and upper end of the range starting to soften, but the compressed state on silver, it could get some more upside, at least pressing up towards that 32 range. A couple stock ideas for you to consider today. We've got two financial names that are coming into some of the screens. We've got BHF, which has got a nice confirmation bar right where we would want to see it. That's inside of the momentum zone, holding support, bouncing, now getting that close above that 236 location on increasing volume within a current uptrend. So we're looking for that rally up, that pullback, that confirmation move to say, hey, there's interest again. There was buying in here. There's demand right here for that stock, and that's where it gives us an actionable type location to make a trade on a stock like BHF. Also, EQH, which is in that asset management space, seeing a nice confirmation bar there, same location, similar pattern, increased volume. The increased volume on increasing price activity, particularly when it closes and breaks out above a more recent price high. That says that there is demand here, and that demand shouldn't just immediately end. It should continue to flow that direction. If it doesn't, you can place stop losses, trailing stop losses below some of these levels, using the Fibonacci tool as your market structure locations to say, here is our trend, here are some of the structural locations that we can manage risk. If it retraces all the way back down to this level, something's wrong with that current trend. We don't want to wait around and see what is wrong. We want to exit at a certain location, managing our risk accordingly every single time. That'll do it for today's update. Everyone have a fantastic day today.